Hi friends, at the time of recording this video, Nifty is trying to cross 22,000 marks and it is at all-time high. And what that has done to many stocks is that the valuation of these stocks is going at very high levels. But what if I tell you that there are stocks which are trading at valuation equal to COVID level valuations? So in this video, I'll give you 3 stocks that are fundamentally good and are trading at COVID level valuations. So the first stock that I'm going to talk about is Asian Paints. So have a look at my screen and you will see the PE ratio of this stock in the last 5 years. At the time of COVID, the PE ratio of this stock was around 62, 64, 63 level. Right now, when I'm shooting this video in January 2024, the PE ratio of the stock is at 61. So the PE is gone back to the COVID level PE ratio. So from a valuation perspective, if we consider PE as one of the important valuation metrics, we can say that the valuation is gone back to the COVID levels. Now, if I show you the price chart of this stock, you will notice that from April 2020, when during the COVID time, the stock price was at around 1600, 1700 levels, and it has gone up to right now at 3200 level. So the price of this stock has doubled in the last 3 years, but the PE ratio has come down to the COVID levels, right? Now, why that is happening, I will explain to you in the details in terms of what is driving this valuation as well as the price growth. But before that, if I just come back to the PE ratio, you will notice these bars that you see here, the vertical bars, these are showing you trailing 12 months of earning per share. What this simply means is that in the last 12 months, how the shares earning per share is growing, right? And if you see, there is a phenomenal growth in terms of the earning per share. And all of us understand the PE formula, which is price divided by earning per share. What has happened here is that the earning per share has grown at a higher rate than the price of the stock, right? And that has taken the PE down. That means the PE has contracted. It is an absolutely important point for beginners to understand that even if the share price is growing up, it doesn't mean that the stock is overvalued. How we need to look at the price is in relation with the earning per share, and this is where the PE ratio comes into picture. So I hope this point is very clear to you that the earning per share is growing up, but the price of the stock has not gone in the same proportion, which has led to the contraction in the PE. Therefore, the PE value right now has gone back to the COVID level, making this stock undervalued from a PE perspective, right? Now, let me walk you through why the valuation is looking very attractive right now for Asian Paints. Now, if you look at the P&L of Asian Paints from the last 2 or 3 years, you will notice that from a sales perspective, from a revenues perspective, from COVID time, March 2020, the revenues have almost doubled. So 35,000 crores is the revenue in the trailing 12 months. If I look at the profits, you will see the profits have almost doubled again from 2,700 crores to 5,100 crores. So almost doubled from a profit perspective. So the company is growing, but the share price has not grown to the level of EPS, right? Now, if I look at the balance sheet of this company, you will again notice that reserves, the company is sitting at all-time high reserves, 16,000 crores. If you look at the borrowings also have doubled, and that is fine because from a revenue perspective, if the company is doubling the revenues almost, profits are doubling, then of course the debt might be higher. So it is not very abnormal from what I see from a balance sheet perspective. But the question remains why the share prices have not gone to the level of EPS growth. For this, if you look at their quarterly results, you will notice that from last 2 years, so September 2021 onwards, if you see, the sales have not grown to a great level, right? If you look at the quarters, you will see that here the growth has been in single digits, right? Now, if I come back and show you the share prices as a result from around July, September 2021 onwards, the stock has been consolidating in a range at around, let's say 3,100 rupees of level, and it has not given any good growth in terms of the share prices. Now, what is driving this moderation in the sales numbers in the last few quarters is what we need to understand. And in my view, that is the weak consumer demand. Now, you will immediately say that, Rahul, you are making things up. Let me back up everything that I say with data and proofs. And if we come back and show you page number 4 of their October's earning presentation call, you will see that the management themselves are declaring that there is a weak consumer sentiments. That is why the top line of the company is now moderating. There is a flat growth there. There is not much growth. It is in single digits. So immediate question will be that, is it happening with only Asian Paints? Let's also have a look at some other stocks in the paint industry. So for example, if you look at the Berger Paints, you will see that their trailing 12 months sales growth has been only 8%. And if I show you AkzoNobel, you will see that the growth has been only 7%. If I show you, for example, Narolak, you will notice that Narolak's growth has been only 5%. The point is simple here, that it is an industry-wide problem because of the weaker consumer sentiments right now, and that is why the growth in the sales numbers is not there in the last few quarters. And specifically, if you read their page 30 in the October earning presentation call, you will see that the rural growth is not there. There is some urban growth, no doubt about it, but the rural growth has been very, very slow when it comes to consumer demand. You might now say that, Rahul, all this is fine. Just tell us whether we should go and buy this stock, or is this stock going to do better in 2024? Well, I can't tell you exactly what is going to happen with this stock, but I will tell you few signs that we need to read, right? So page number 23, the management believes that the demand is going to improve in Q3 and Q4. So we can read that commentary here ourselves. The rural demand that has been down in the last few quarters is likely to pick up because elections are coming up. And also I will talk about the inflation in a few seconds in terms of how the inflation might come down in 2024. That might give some boost to the rural demand as well. However, one risk that we need to be aware of this business is their export business. They are primarily dependent on Nepal as one of their contributors to the export business. And if you see right now, the management is not very confident whether that business unit is going to pick up or not. So that still remains a risk or an uncertain situation from a sales perspective. But if I come back to the inflation, you will notice that in the month of December 2023, inflation has been all-time high from a last 4 months data perspective. And if you look at the RBI's repo rates, they have been consistently going up and it is now almost at 6.5%. But what is likely to happen in 2024 is that this cycle is likely to get reversed. So in my view, RBI is either going to hold these rates for longer, or they are going to slowly start cutting the interest rate down. What that will do is that will going to ease the inflation, and of course there is going to be some demand coming from rural segment as well as urban sector, and that might have the good sales growth coming into this Asian Paints stock, and we might see some price upside in this stock. Again, not a stock recommendation here, so please do not take this as a stock recommendation, but I've given you a lot of good points that hopefully you are making notes and you are doing some further research to make your own judgment. Last point that I want to make about Asian Paints is the crude oil prices. So all of you might be tracking the crude oil prices and they are all-time low. Right now, if I show you the crude oil prices, they are all-time low at 72. And what that does typically is that 40% of the input cost in the paint industry is through the oil, right? So if the oil prices are lower, the input cost to the paint manufacturing is going to be very low, and that might give some profitability boost to paint stocks as well. And Asian Paint is one of the fundamentally strong stock. So I've given you a lot of details about Asian Paints. Let me know in the comments what is your view in Asian Paints. And if you like this analysis, humble request for you to hit the like button. Let me know in the comments a simple thank you and you're liking this sort of analysis. That will motivate me to do more research for you at zero cost. The second stock is Eicher Motors. And if I look at the PE ratio of Eicher Motors in the last few years, you will notice that in April 2020 during the COVID time, the PE was at around 25, 27, at around that range. Right now, when I'm recording this video, it is at around 29. So slightly higher than the COVID level, but I think 2 or 3 points here and there does not make the big difference. The point remains same, that it has gone back to the COVID level, right? From a PE perspective. Now, if I look at the price chart of Eicher Motors, you will notice that for almost 2 years, from roughly November 20 to August 2022, almost 2 years time period, the stock consolidated at around 2,500 levels. And from that time onwards, the stock has given very, very good run up. And right now it is trading at around 4,000 levels, right? Now, what has caused this growth in the last 12 months to 15 months is what we need to understand. So if I just show you their P&L account in the last 2 years, 12 to 15 months of revenue and profit growth, if we see, the revenues have actually doubled from March 2021 to 2023, almost doubled here, right? From a profit perspective, it has almost tripled now, looking to triple now. So there is a huge growth coming, and especially if you see trailing 12 month, right? Very, very important, TTM, trailing 12 month, if you see 20% compounded sales growth, and the profit growth is looking very, very healthy, 53%, right? If you look at the shareholding pattern of Eicher Motors right now, promoters have maintained their stakes throughout. If I look at the FIIs, they have also maintained the stake in the last 3 years. If I look at the DIIs, that has gone up from 9.35% to 10.48%, marginally higher. So overall, from a shareholding pattern perspective, it is looking very, very good story. Let me now walk you through some of the risks with the Eicher Motors and also the fundamentals of this business so that you understand the complete picture. So if you look at Eicher Motors as a company, there are two business units that it operates in. Number one is Royal Enfield, the premium bike that all of us are aware of. And number two is joint venture with Volvo, where Eicher Motors has 54% stake. And this is where they're manufacturing the commercial vehicles, which I will talk about in terms of the growth prospects. Now, if we come back to the domestic motorcycle market, you will see a very, very interesting trend here that post-COVID, if you see, the market share of 250cc in motorcycle, which is the gray line that you see here, it is growing up at a very, very good rate. Right now, it is at 8.2%. So more and more people are now buying bikes that are in 250cc segment, which is one of the products that Eicher Motors offer. Now, what is driving this consumer demand? If we look deeper, you will see that it is mainly because of the rising income of the middle class in India. Middle class is not so middle class that used to be 5 years ago because of higher disposable income that is going on in India right now. And if you look at the projections here, per capita GDP in 2019 versus what is projected for 2030, that is going to almost triple. So I think premium bike sector is going to see good growth in the upcoming months or years because of higher disposable income. So from a motorcycle business perspective, their motorcycle business is likely to see some growth coming up in the next few years. But the biggest risk that remains is that competition in this segment, because I've talked about Hero MotoCorp in one of the other videos, and their Harley Davidson and Triumph bikes are also doing very, very good healthy order book there, and Bajaj Auto is also looking very, very good. So one of the investors, CLSA, they expect that Hero MotoCorp and Bajaj Auto is going to eat the market share from Eicher Motors. Again, nobody can predict it, but from a motorcycle business perspective, competition remains their biggest risk. Let me now walk you through their commercial vehicle business as well. If you see, this business is doing phenomenally well. If you see highest ever second quarter sales of 19,551 units, their highest ever second quarter sales for heavy duty trucks, their highest ever second quarter sales for the low and medium duty trucks. From a bus perspective, bus division is also delivering highest ever sales. Their parts business is also doing highest ever sales. So there is a lot of growth coming in from their commercial vehicle perspective. If you look at the market share, they're gaining. Heavy duty trucks gone up, light and medium duty trucks gone up, Volvo Trucks India gone up. So overall, from a commercial vehicles perspective, Eicher Motors is doing much better. I really don't know how much of their business is coming from their commercial vehicles versus motorcycle business. They are not sharing that data in their P&L account as well as in their investors calls. So we really don't know how much of business is coming, but overall their commercial vehicle business is actually growing at a very, very good speed. Lastly, from e-mobility perspective, they've signed MOUs with Amazon India and Green Cell Mobility to supply 1,000 electric trucks and buses respectively over the next 5 years. So I think they are also moving into the EV sector. Now a humble request that please do not take this stock as a stock recommendation. Please make some notes, do some further research so that you take informed decisions. Talking about research, if you are liking my research, my method of analyzing the stocks, you can consider subscribing to my YouTube member community because I post in-depth analysis on many stocks, mutual funds, and many other assets, and you will really gain a lot of insights into the individual stocks and will take some informed decisions. You will find the link in the description or in the pinned comments. With that, let me move to my stock number 3, which is Hindustan Unilever Limited. If I show you the P chart of HUL, you will see in the last 5 years, during April 20, the stock's P was at around 65, let's say 66 at that level. Right now, when I'm recording this video in January 2024, the stock's P is at 57. So it is well below the COVID levels. And again, the story remains exactly the same, that the earning per share has grown at a much faster rate than the price of the share. Again, if I come back and show you the price chart, very, very important and interesting pattern here, you will see in 2021, the stock hit all-time high of 2,800 levels. In fact, it has come down from that time onwards, but in the last 12 to 15 months, the stock has been consolidating very nicely in the range of 2600 levels, right? What is likely to happen in the upcoming quarters and years? I will talk about that. But more importantly, let's understand why the stock has been consolidating and has not been growing as it was growing at this time period that you saw good growth that we saw here, right? So for that, if I just show you their quarterly results, you will notice in the last 12 months or 15 months from September 2022 onwards, if you see their sales figures, absolutely flat sales that you will see 15,000, 15,000, 15,000, 15,000 and so on. From a profit perspective as well, if you see, profits have been absolutely flat, 2,600 levels, it's been hovering. And investors, when they see this, they're not going to give a lot of attention to the stock because they see that the growth has been stagnant, right? If I talk about specific numbers, trailing 12 months, sales have gone only up by 9%. Profits also have been into the single digits, right? Now, if I come back and talk about the shareholding pattern of this company, again, promoters have maintained the stake. FIIs have slightly lowered their stakes, while DIIs have slightly higher their stakes. So overall, there is nothing major here happening from a shareholding pattern perspective. But if I now talk about what is driving this business stagnancy, let's talk about that. The key factor remains the rural demand remains subdued. And you will hear this commentary across many other sectors that the rural demand right now in India has been subdued in the last few months and quarters, right? Again, being very, very specific here, if you look at the numbers, you will see that rural market in the last 2 years have actually grown at -1% from a Hindustan Unilever's business perspective. And overall volume growth has been very, very flat as a result. Urban has grown up slightly at around 3%, but rural has been very, very down. Now, if I come back and talk about very specific which categories we are seeing this flat growth or degrowth, you will notice that the skincare and color cosmetic business has seen double-digit growth. That is growing perfectly fine, no problem there. But their tea business has seen decline due to inflation. I'll talk about it in a minute. Also, if you look at the coffee business, that has seen also volume decline. So tea and coffee from a HUL perspective is taking them down from a sales and profit perspective. Now again, if you go very, very specific, you will notice the page 19 of their October earning call that in the last 3 years, we Indian consumers have seen cumulative 25% inflation, right? It is a huge inflation. Post-COVID, world economy has seen huge inflation across the world, actually, not just in India. And as a result, the first category that consumers have downgraded in terms of their consumption pattern is tea. India, which is a tea loving country, the first thing that we have downgraded is we have moved to the loose tea. Many people have moved to loose tea, which is cheaper, of course, and that has had a big dent in the profitability and revenue growth for HUL. If I talk about coffee, page 20, if you read, they are talking about 60 to 70% of price inflation. And of course, when that happens, people will stop buying or they will lower their consumption to coffee, right? So these are the two main factors that are driving this. But what is the outlook? Again, page 26, if you see, post a high inflation period, there is going to be a gradual recovery. And I covered that in my first talk, Asian Paints, that in 2024 and 2025, what is likely to happen is RBI is going to cut the interest rate, and that is going to bring the inflation to normal levels, right? And hopefully the consumption will drive, and that will take some of these stocks to very good valuation. But right now what I can see is that these stocks are trading at a very, very low valuation. Again, not a stock recommendation here. I'm giving you a perspective. Valuation is anyways a complex topic. PE is not the only ratio that you should use for valuation. So please take this with a pinch of salt. But I've given you a lot of good details here, which is unbiased. And hopefully you're liking this content. If you're liking that, hit the like button. Let me know in the comments. A simple thank you. Last point I want to talk about HUL is that recently on 2nd of January, they received the GST demand. It feels like ED is issuing GST demand notices to every single company in India. I don't know what is going on here. But if I look at the context of this demand notice, you will notice that this is a very, very small amount, right? So HUL, that is earning 60,000 crores of revenues. The company says that there is not going to be any material impact on our financial position because of this GST notice, which I totally can see that, yes, this is not going to be a big problem, but I still wanted you to be aware so that you make decisions which are based on the data and facts, and not because somebody is saying that the stock is going to double from here and all that bullshit. If you are new to my channel, make sure you're subscribing and pressing the bell notification, because I release these unbiased analysis for you at zero cost, almost on a weekly basis, and you will get benefited from that. I hope you enjoyed this video. I'll see you in my next video. Until then, keep rocking.